Okay, hello, how you doing? You should be able to hear me very good. How you doing, Mr. Casey? Hope you are doing well. As always, the most dedicated member who is first and always to show up. Hope you are doing well. You know what time it is. We're gonna go over technical analysis. Look what chart is saying. Unfortunately, today, by the way, as you can see, we're doing this early on, and this is going to be relatively more efficient because you'll be able to see what we're expecting throughout the session today, although this is already somewhat ominous and self-predicting to what we most likely to see is the price action will end up probably filling in that gap. Although I mention and say all the time that gaps are just, broadly speaking, they are a side effect. There are other real world causalities that sort of cause, that are the trigger, the actual motive for the price action to behave that it does, ranging from robotic trading mechanisms, bots as we call them, various institutions that identify various potential quick trades, support and resistance levels that are on the technical side of things, cyclicality, and multiple other factors that come together and are the reason for why we often see gaps being filled or the market price action behaving one way or another around gaps. Irregardless, we need to remember that they are not the end all of all things. They are just a side effect, as I mentioned, and in fact, we should be far more attentive to the things, the actual causality, the actual triggers, because those can at times indicate and show that irregardless of a gap, it is not always a given or a certainty that the market will rush to fill that gap. We can always fill it in at some other time. And so it's far more objective to look at what the momentum currently saying, structure is saying, rather than just day-to-day small gaps, basically. So if we look at 5 minutes, for example, if we're seeing right now the current channel is as it's developing, we still are on the bullish side of things, so far more likely to see within the framework of the following 30 minutes-ish, give or take, at least some remnants of that bullish behavior by, as it appears to be right now, moving more so sideways rather than downwards, although we are sort of pulling back and forth, back and forth. This is that regular ebb and flow that we keep talking about and mentioning. Let's look at the 30 minutes. 30 minutes is far more indicative in a broader outlook of time. That means, and we are, as you can see, the narrower channel we've been testing and moving within the framework of for the past handful of days, or not so many if you want to be objective about it, yet it is more so a sideways channel with a bit of tendency, with a bit of leaning upwards, but nothing crazy. Right now we've broke out of that channel, arguably so. I would say we still are probably gonna go back into it, test the support level of the broad of this channel itself, maybe even still 7,754. I will not negate that simply because we've been bearish and running low for some time now as an outcome of overnight trading. And just besides the gap itself, it appears to be that the market is building up bullish momentum, at least on the smaller time frame. Let's see what 45 minutes says. Likewise, 45 minutes basically is squeezing that bearish momentum that is left out. Arguably, we're just below the channel. As I expected to see, but probably within the hourly channel, we're going to be just at the edge of it. We're basically testing the hourly channel bottom, arguably, if I'm right. Yeah, there we go. We're testing the hourly bottom support, no, bottom support, the support. In actuality, we basically broke away from the median, from the center line, testing the top, testing the median, transitioning to the bottom. Right now, we're testing the support channel, the support line. Basically, we're within a sort of narrower channel. It's not going to be all that surprising is as time progresses and the channel appreciates in its coordinates, so to speak. So it's not going to be all that surprising if we're going to see a little bit of that similar sort of directionality or a bit of a diagonal angle to the behavior on a broad scheme of things. Since we right now have been running low on both sides of things, normally this is where we anticipate a transition. We are bearish dominant still. If you can look at the values, it's 0.02 versus complete zeros. That means we're probably going to see the broader picture of the thing on the 4 hours, which basically becomes the determining factor or an indicator of whether we're far more likely to see a correction upwards into the gap or a breakdown out of the channel completely. This in reality is still bearish, and I would argue that I would think that it's bearish because we're probably moving towards the median of the broader channel we're moving our way within the framework of. Again, these channels are super important. They are a moving average, a representation of a moving average of sorts, which basically measures exponentially the recent price action. And from that develops this channel, and oftentimes the more narrower we keep it, certain ratios or certain variables, we end up excluding the slippage, which oftentimes is exactly what it is, merely slippage and not direction determining. So not to be impacted by every sort of swing of the market and thinking, oh, is this it? Is this it? Is this it? In reality, we're looking at a broader picture, and this is sort of part of the skill set and tool set that allows us to do so. Now, so that's what we're looking right now at. It's kind of problematic at the same time to say that we're not going to fill in the gap, because it appears that we still have on smaller time frames some momentum that is being gathered exactly for that purpose. And yet on the 4-hourly, which is pretty much a good representation or very close to the daily representation, and so I would argue that this right now is still bearish, but I would not completely negate the ability of the market to flip around right here, allow it, let's say, by tomorrow or the following sessions to have a bit of a correction. Yes, it is true that we anticipate, and it seems that we're going to see that in a second, a broader downward trend, a very significant and strong one. Nasdaq is still extra gross today. Let's see how Nasdaq is. I mean, I checked out how Nasdaq was behaving, but yes, look, Nasdaq is a lot more indicative of the directionality we're actually having in the market right now. The weight is impacting the Nasdaq a lot more severely than it does the S&P. And yet we got to be objective that we want to see sort of the breakdown, that the two similar processes and alignment between all the major indices before we can truly anticipate a broader market-wide breakdown. And so we are seeing, it is almost like that moment when you're driving closer and closer to the sea, to the beach, and you can smell the sea, but you're not yet seeing it. Like, you know, you're really close, but you're not really there yet. So in fact, we are seeing some of these leftovers of you know, almost like engine farts, that basically the petrol is running out, and it's almost like, you know, on its last breaths, if you will. And we can see that, we can start to see, for example, how our daily momentum on the day chart is becoming more and more severely bearish, which I warned about. Again, normally that's just that's how it works. There is nothing new here. We can ride high temporarily, but the more we run high, the more we are charging, per se, so to speak, the other direction. In which case, if we were bullish, we're charging the bearish direction, and it most likely at the end of the process will end up exploding stronger downwards rather than upwards, sort of retaining that momentum. Sort of like the stronger you exert the engine, the quicker it will need to go for a break or a rest of sorts. And so we've been running hot on our daily for quite some time, and I warned for basically, you know, several days that guys, although we had a bit of a rally that is, based on the structure conditions, if you will. It's almost like crosswinds just merely happened, a little bit of geopolitical noise. But on the grand scheme of things, it appears that we're going to try and correct all of that, bring it back down to earth, bring it back to our head structure. Which will result with around 7,300, 400, 533, a level we tested before, 584. But on the grand scheme of things, what will be happening in the following sessions is just kind of going back to this linear sideways channel. We just had a bit of a burst outwards, that's all, and we're going to be seeing most likely a bit of a correction into the channel, into that structure. And if the larger time frames that we will look at in a second will be predicting more so bearish momentum, so it's not going to be all that surprising if instead of transitioning into more of a sideways behavior, which will probably happen irregardless, it's very unlikely for us to just continue and plow through this multitude of strong support resistance levels that we already tested many times, just plow through them. Of course we can. Realistically speaking, the market can do that, but how likely is it? Not that much so. And so that's far more likely for us to see a little bit of a retest, a little bit of a process going downwards. But then the broader anticipation, and here I remind the viewers again, and remember, I'm not just talking out of the technical aspects and facets of the indicators that we're using, but also from my own knowledge and experience. And I've been working in the industry for pretty much right after the 2009 crash, as we were coming out of it. I've had to retroactively study these case studies, every single one of them, whether it's the .com, the prime real estate crash, the tech bubble beforehand, and every other, the gold crash 71, transition from crash rally, transition to the petrodollar, every single one of these, and in fact all the way to 1930s and prior to, so basically right prior to the war, and the 100 years prior to, very much so. And I'm very well aware, my experience and knowledge of the market is very extensive. I've worked in that profession for quite a long time, as you can tell. Post-COVID, I went independent. And I can tell you from my own experience, I am actually being able to see all the fundamental signs and the technical aspects coming together to signal that major transition into a bearish cycle, or part of the cycle. In fact, every cycle within itself has a bearish partition, a bearish portion to it. And unfortunately, you cannot anticipate how bad it's going to be unless you understand what the cycle is, what it stems from, what are the forces affecting the cycle, who are the players, so to speak, how likely the cycle is, what are certain commonalities between these various cycles, and how you can use various behaviors of the price action to identify whether we truly are in that cycle or not. That, again, that is the beauty of technical analysis, that really it is far more mathematical rather than I think like it looks like. It has to be rooted in these rules that are as consistent as oxygen, if you will. And if you are unaware of these systems, you will never be able to identify various behaviors that are signaling a major correction, a major, major bearish crash, in fact, because what most people don't realize, I'm merely talking, what you're seeing on my screen right now is merely a portion of the whole thing. And if you think that the whole correction will be summed up right here where the arrows end, no, in fact, this is kind of a general guidance like structure to show what we anticipate, and those who are familiar understand that we're basically looking at a broader harmonic pattern that is known as the head and shoulders. Of course, I'm not saying that the shoulder will be capped at 6,666, not necessarily so. It can actually plow through it and test a handful of support and resistance levels we have right here. In fact, go all the way to 7,267, by doing so mislead the broader public that we're not dropping. And so there may be some measure of a real broader movement up post the correction downward. So basically, maybe we are into quite a volatile market for the upcoming handful of years in reality. People don't oftentimes realize that If we say we're not looking at a long period with regards to the monthly view that we're looking at right now, normally we refer to a handful of candlesticks. A handful of candlesticks on the monthly chart, for example, would be a handful of months. In this case, we're on the weekly, and so we're referring to a handful of weeks, which in essence we are automatically already saying we are talking at least about close to a month, if not longer. And you got to understand that in relativity, if we're again talking about a relative close short-term period and we're looking at the quarterly chart, we are talking about a handful of quarterly candlesticks. A handful of quarterly candlesticks is 3/4 of a year or a year or even a little bit over that. In other words, you need to understand what we mean. We technical people or analysts in the industry, what do we mean when we refer to short or long periods? These terminologies are used very loosely. No, I wouldn't say loosely, but rather in accordance to what time frame it is that we're looking at and scale of cyclicalities. The cyclicality does come through in major scales and also in minor scales. And you need to be able to understand where the beginning and end of a cycle is in order to be able to understand in which portion of the cycle we are and thus anticipate the very next step. It's almost like having a duo of people in a rally car in a rally race, and basically you'll have a one driver and a navigator. The navigator has to make sure they are on the right path, the right place on the map, and use the various landmarks and the understanding and knowledge of the map to navigate and help the driver navigate to the end of the course. Very much so, we are basically we are both. We are our drivers and navigators all put in one. We are our own navigators, in other words. And so we have to understand the layout of the system, the structure we're moving within, to be able to anticipate how the cycle may play out. And even then, we have certain limitations based on distance or time, if you will, and processes. Really, we're not measuring time. We don't time the market ever. It's one of the worst things you can try and do is time the market. One of the stupidest things you can ever do. Really, what we do is we identify processes, and from identifying these processes and knowing where the cycle, how the cycle is, where in the broader cycle we are, identifying momentum and correlating, putting these things together to make sure we are where we think we are, or we are completely wrong and we're in a different place, and so reassessing and then this sort of understanding from that what the market implies or indicating that it will be doing onwards. Right now, the indications that we've been running high for some time now, and those who understand cyclicality, in fact, this impulse did not need to be as big as it is. I think we are actually observing the market makers taking advantage of the gullibility of the retail right now and their lack of experience, knowledge, and understanding of really where we are in the cycle, and them basically loading up like crazy because from any and all directions they've been told, look, the market been so bullish regardless of bad conditions, that means it must be bullish onwards and from here on out to the moon. Unfortunately, the market has been irrationally bullish, and when the market is irrationally bullish, it also corrects in an according manner. And so the same way we overshot, we will overcorrect to keep balance. I wouldn't say per se overcorrect, but it will feel like an overcorrection given how low the bottom would be. Right now, the nearest major support, major I highlight that we're looking at, would be roughly around the 6,000, of course, 7,000 level. Which we will be testing on our way down significantly so, which is about $700 down, and then roughly about the 6,000 level, which is extremely significant, extremely major. We will be testing it for a long period, and from there, probably, if not dropping to 5,700 and that vicinity, 57, 5,800, bouncing back up all the way to 6,000, the mid 6,000s, and maybe even slightly higher. As we said, this shoulder may end up playing out in a completely different manner that I'm sort of showing here on my chart. It's just to show the general broader potential guidance of the structure that will play out. And as you can see, again, we've been sort of waiting for the change, the transition for some time now, and it still may take a little bit of time. Just the other day we spoke about it on the monthly chart. In fact, we're just seeing sort of the diminishing of what this candlestick has built throughout the beginning of the month, and now we're sort of starting to retract on it. And what will be the actual determining factor of how this month will look like, we will see in about 13 to 12 days, basically around the end of the month. And what it appears to be that next month is truly the one that is building up to be significantly more bearish. So basically what we're saying, even though similar to what we saw in the smaller time frames, we still have both momentum and time to fill in that gap. Basically, right now, transition from being more so bearish as we are right now, go back, correct on the gap we just generated overnight, and continue downwards within the framework of the following week. So it's not that much of a problem. In fact, we're seeing all the correct signs that the market is building up exactly towards that sort of action. No one says it's going to happen overnight. In fact, more likely so that this will take the full sort of stretch of the time that it may use for that process, and it's far more likely to take about a week and a half. But remember, the problem with something that when it's overdue, that it's the more overdue it is, so to speak, or behind or late, the more likely it is that it can literally play out any second. And although the signs are pointing towards a little bit more of a prolonging, it literally can happen any moment. And this gap that we have is not a necessity for the market to fill it in, but rather, like we said, the side effect. And so the market treats it in a way that if it's not going to get filled this time around, it's going to get filled on the way back up. Remember, even if the market will crash very severely as I'm anticipating, in the broader scheme of things, eventually it will be going up, and by going up, it will eventually fill in the leftover of a gap, even if it was left for a very long period and not filled in. In other words, gaps are not as detrimental, and we cannot say, oh, we can't be continuing downwards before we fill in that gap above us. Nope, not that important, just like I said earlier. So on the broader scheme of things, basically what we're seeing is very high likelihood still, irregardless, although we just said it's not crucial or completely sort of forced on the market to fill in that gap, right? And again, the price action is not a prisoner of this. And yet, given the momentum we're seeing, it's far more likely that within the following sessions, throughout the following week or so, give or take time, again, give or take, maybe it will even happen in the following 2 sessions. So we will see a completion and a filling. The price action will fill in the gap by moving and transitioning through these higher price points that we missed out on or moved through overnight. And then the bearish by that period of time, we're going to be closer and closer to the end of the month, which is indicative of next month becoming significantly more bearish. In fact, as we say, next month appears to be the actual sort of transition point from almost neutral to actually bearish. So if we pay close attention to this, we're going to see that we already are actively bearish. It's just a matter of time until we actually transition and become full on bearish. Right now we are still kind of teetering on the edge at the 80 range basically, but since we're bearish dominant, we can anticipate that if it will remain so, which we do not see any significant bullish momentum sort of moving into the system. In fact, it seems that we have barely enough momentum to have a correction on what we have had done so far, and so it's far more likely for the price action to continue and stay bearish in the long run, which is again next month, which means only a couple of weeks left before we actually continue onwards down. And yeah, that is it. That's all I wanted to bring to you, ladies and gents. Those of you who are members of my academy, ladies and gents, don't forget we now have a new role and a major discount going on. And we now have a up to 70% discount. Basically, it's those 50 plus 20, because if you see, for example, for the full access tier, which I highly recommend, originally the price should be right now $90, but then if you switch that annual ticker, it doesn't just, it cuts off 50% off of a 72 price instead of a 90. So basically get those 20% off and 50. So right now, this is the biggest discount you guys will ever have, and the ability to join at the lowest price possible. Even the one-on-one academy, where I literally tutor you, stay with you, sessions, around 12, 13, 14 sessions. It depends on how quick we can finish it all, but usually it revolves around this number of sessions. Every session is between 1 to 2 hours. And so very serious one-on-one tutoring on how to analyze the market within its more basic scope and more advanced skill set and tool set, so you can analyze the market to the depth that I am capable. Even if I am let's say something happens to me and I'm not there to help you out, you can do it on your own, and you truly are an independent analyst for yourself. So I highly recommend joining there, simply because that is now also highly discounted. And that's probably the highest discount you guys will ever get, 70% basically right now off of the current price on all the tiers. Blah, 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 blah. That's it. Remember, by the way, the one-on-one academy, it's just a one-time payment. It's not monthly as it says here. It's just a one-time payment. It's just set up this way because there is no other way we can set it up on Patreon. Everything else is a monthly payment and a monthly tier. This tier is particularly made for the Academy graduates, boys and girls. Don't forget, all the Academy graduates, if you want to participate in the meetings, from here on out, you have to be members of this tier. Right now, it's only $6 for you. Members who have not graduated the Academy will simply be refunded and kicked out of that tier. And so, yeah, this is a strictly Academy graduate tier. Guys, girls, sign up right now while it is literally $6 a month. There will not be a cheaper price than this ever. Why is the discount? Because at the end of the month, just soon, I will have my birthday, and I really wanted to give back a little bit to the community, and yet we guys are transitioning to this newer model. And so instead of paying $15 a month, pay $6. It's just far more beneficial. That's it, boys and girls. I'll see you on the next one. On the grand scheme of things, basically what we're saying for the upcoming session, even if we're going to titter sideways, don't be surprised if we will correct and fill in that gap within the following sessions. But on the grand scheme of things, even though we'll probably fill it in, we still are on our way down. That's the unfortunate reality, ladies and gents. I'm not here to tell you what you want to hear or whatever biased opinion anybody here has. I'm here to give you the truthful, honest analysis and interpretation of what the market is saying that it is doing actively. Yes, we also acknowledge and admit that maybe there will be still a test of the current level at 7,800-ish range. We still know that is a possibility, but right now the current structure is building up to be a lot more bearish in the following weeks. And even if we're gonna have that little bit of a burst, it does not change things at all whatsoever. There's a harmonic pattern to play out, which may still involve a bit of a movement right here before we see a breakdown, which is a very normal behavior for the market. So that's it, ladies and gents. That was the final note. I promise. Let's goodbye. I'll see you in the next one. Community members, I'll see you on the Discord, where we post and discuss these charts and everything that is going to happen.